Hi there, welcome to this week's weekly Forex forecast, Monday the 21st of February. Now, in order to access this weekly Forex forecast, just head over to the ForexSignals.com website and scroll right down to the bottom. Okay, here you'll see all our bells and whistles, all our free tools and so forth, which you can avail. Head over to Forex Forecast, click on that tab there. And up will come the forecast. Now you can access it, as I say, directly from this website, or you can indeed put in your email address there, and that way we'll send it directly to your email inbox the moment that it has been released. So therefore you're going to get it the moment it goes out. Okay, so let's have a look at what we're looking at this week. Okay, so Max has got his eye on Bitcoin. Max is turning bearish on Bitcoin. Shame about that. I loaded up on Bitcoin last week. Never mind. Anyway, Max is looking at a retracement there for Bitcoin back down to 36,500 level. Bearish sentiment growing there. I see where he's coming from. We've broken through that key level of support there at 40 and so forth, and looks as though we are now on the next leg down, putting in that double bottom down there around that level. Okay, so that's Max's view on Bitcoin. I'm looking at a gold play. Okay, gold has finally reached that 1900 level, popped through it there on Friday, trying there again today, but it is seemed to be coming under some pressure. A couple of price action patterns in there, which are indicating that maybe there's indecision at this level and that we may be now seeing a bit of retracement lower. Certainly if there is any form of de-escalation this week in the Ukraine-Russian tensions and so forth. I saw China got involved over the weekend, saying it'd be a bad idea for the Russians to get involved there. And of course, Shane puts his weekly overview there. So each day he puts out day by day what to expect and how the markets could be reacting, the things to keep an eye on. So very important. Let's jump onto the screens now. I'll show you what I'm looking at in terms of this gold play. We'll also look at the momentum meter showing you strength and weakness, but also I'm going to show you how I draw support and resistance on my charts, which I hope you'll find useful. Come on, let's go. Okay, so let's start off by looking at the momentum meter. This tells us the strength of one currency relative to the other currencies. Doesn't predict the future, but it does tell us exactly where the money is flowing at the moment. Now, I've got this set here on the 4-hour chart, but of course you can change this to any particular time frame that you wish. You can even drill down say to the 5-minute chart or the 1-minute chart. This shows you what's happening at the moment. Great little tool for scalpers. If you see a currency on the move getting strong and a currency getting weak to the downside, then that may be a scalping opportunity for you scalpers out there. So you can even go down to the 1-minute charts at the moment. That just takes us time to reset. You can see the Canadian dollar is having a pop higher. No, it's not. That was just catching up. There you go. At the moment, on the 1-minute chart, you see the Japanese yen is coming lower, CAD's coming lower, and the pound is popping higher at the moment. Pound is popping higher, if you like, on all the time frame charts at the moment. Right, let's have a quick look then at the 4-hour chart. You see the pound is the strongest currency today, just by a margin. You're seeing the weakest currencies are the Canadian dollar. The dollar's coming under a little bit of pressure at the moment, and the euro is down there as well. You don't often see the euro and the dollar behave in tandem like this, almost like jiving together. Normally when one goes strong, the other goes weak, and vice versa. But at the moment they are moving together. At some point they will break away. That basically means that the euro dollar will be consolidating. But we are seeing the safe haven currencies, the low yielding currencies. These are the currencies that the markets flood to in times of risk on. Slightly bid this morning, which is maybe a bit of a surprise looking at the fundamentals over the weekend with the Russian, Ukraine and China weighing in as well. But there's still concerns out there. Now, if the markets were to get really concerned about the Ukraine, Russia, then you're going to see the yen and the Swiss push considerably higher. So we'll be paying close attention to that at the moment. Commodity currencies, the orange line here, that's the Australian dollar and the New Zealand dollar. They are just edging a little bit lower, but if you look on the daily chart, they are still up there. This is the daily chart, so we've got the Aussie, New Zealand, the commodity currencies reasonably strong. My bias for this week is maybe for a de-escalation of some of the tensions out there, and for the yen and the Swiss to trade lower, and for these currencies maybe to trade higher. So we'll be paying close attention to that. Let's just have a quick look at that gold chart that I was talking about. Okay, so this is gold. This is the XAU against the US dollar. And you can see here that on Friday we just pushed above the all-important 119 level, $1,900, and put in that doji candle. Doji candle is basically where it opens and closes at about the same price. It basically represents indecision. Today's candle, which at the time of recording, Monday candle, putting in another doji as well. We've hit this new high, got up to 119.08, but then was met with a big wave of selling in quite thin volume. If you're looking back to the left of the chart here, basically back to May and June of last year, that's the last time we were up at these levels. So not, it's about 9 months ago we were up at these levels. It's an all-important level, so there's always going to be some change of buyers for buyers and sellers possibly coming into the markets as traders look to take profits. You know, traders have been along this all the way up really from about the 1750 level. So there's definitely going to be profit taking on here. I never know what's above here. None of us know what's above this level of resistance. We can only look at price action to give us a clue. And this doji candle today and Friday gives us an indication that there is definite sellers around in this commodity. Now, for my bias would be, if we see a failure of Friday's low in around the 1885 level, which is basically the low of today as well, if we see a break of this, then we're going to be heading back down towards the 1850 level, which is basically back down about there as profit takers set in. You may see a bit of support coming in around the 1865 level. So at the moment I'm waiting for a break of lower of these two candles to indicate a confirmed rejection, and then of course we'll trade potentially lower. And of course if you're wrong, of course you'd have stops above those levels. A longer term bias for gold is to trade higher. It's been on my radar for a year or so now as the inflation sort of story grips the global markets. So I expect gold to still perform better in the coming few months. But in terms of short term, if there is de-escalation of the Ukraine-Russia, then we may see this currency pair succumb to some profit taking back to those levels. Right, what I want to do now is just go through a couple of currency pairs and look at how I draw support and resistance on the daily time frame. I want to make this part of the Monday morning stream just to go through a couple of the major pairs, looking at key levels of supply and demand, support and resistance. Let's start off by looking at the nation's favourite, the euro against the US dollar. Okay, so this is a completely clean chart of the euro against the US dollar. Now, I think the best way to draw support and resistance on the higher time frame charts is to basically ignore the wicks. Now, the wicks, that's basically the vertical lines. They represent the high and the low in that particular day on a daily candle. I like to ignore those. And the best way to do that is by toggling back to the line chart, which you can do on your trading platforms. This basically shows you the close of that currency pair or that trading entity on that day. It basically shows us who was in control on that particular day. Were the buyers in control or were the sellers in control? So it ignores the highs and lows and the noise, as I say. Now I look for places that have been respected two or more times, but also where you have those V bottoms or where you have those sort of A tops as well, big levels. So it's a good idea to have these plotted. I tend to do these on a Sunday ahead of the trading week, so you have your key levels. Not necessarily trading off them, but certainly if you want to get your win-loss ratio up, if you're taking profits and they have to go through one of these key levels, then maybe you should hold back on that trade. Great way to get your win-loss ratio up. So let's just have a quick look in here. I just want to plot in some lines in here. I think there is certainly going to be one down here. Okay, which comes in around the 1145. We'll definitely have one at around that level there. I'm also going to plot one in there, which is around the 1310 level. And the reason why I'm plotting it in there, we bounced off it there, bounced off it there, and we had some price action change going on there earlier as well. And a little bit higher up, okay, one there, that was the big move down, and of course those ones up there, you've got a bottom there and a top there. So these are the key levels. The idea about drawing support and resistance is not to draw too many, otherwise you'll be refrain from doing anything. You'll be what do they call it? Paralysis from analysis. So just have the major levels in, okay, and when you drop back to the candlestick chart, you'll see how clear it looks. So basically the idea is, if you're having a profit target above or below, then maybe hold back, or indeed you may look to trade price continuation once it breaks, retests and continues back down through one of those levels. That is the euro against the dollar. We'll have a quick look now at the dollar against the Japanese yen. Okay, back to the line chart. Well, you do always have one at the highs up there. I think you've got another level of significance there. That short saw that big pullback, and we are going to have this big V bottom drawn in around there as well. Definitely one down there as well, and of course as you go down. So using the line chart is I think the best way to do that. Putting back in the candlesticks, and there you go. Last one, we'll look at the, say, pound against the Japanese yen, which I've got my eye on this week. So this is the pound against the Japanese yen line chart, and in we go. We're going to have one up there, double top. We're going to have one at the high from up there. Looking back here to May last year, this is where there's big rally all the way up from 147. This is where it stalled. Okay, we're definitely going to have one in there. Okay, and also respected it there as well. So that, if we do trade down, I mean, that's 155.85. It's going to be a significant level, and I would say we can possibly have one maybe around this zone here. And I'm just sort of thinking here, because of this price action here and this V recovery, which put in sort of a 100 pip move last time around the 155 level. I think it's going to be an all important round number as well. So we're going to put one in there as well. These are zones that you should be considering. Back to the candlestick charts, and then when you go to the lower time frame charts, which you can see here to the left, you can see them on the 4 hour as well, and of course on my 1 hour as well, and you can see how price does respect those. Okay, so I'll do this exercise every week. If there's any particular currency pairs you want me to plot, S&R, support and resistance, please do let me know in the comments section. Okay, so I hope you found that useful. Don't forget, you can leave me a comment, let me know what you think, let me know what you want me to look at next week in terms of drawing those support and resistance. Hopefully after a while you're going to get familiar with how I think it's best to draw these levels, which are crucial in your chart analysis. Don't forget to subscribe to the channel. Don't forget to follow us on all the socials if you don't already do so. And as you know, we are streaming live now round the clock, up to 7 times a day. 4 mentors covering all time zones. If you want to take part in that, you can do so. Just head over to the ForexSignals.com website. I think you can take out a 7-day free trial as well now. So you can see what it's all about for 7 days. If you don't like what you see, you don't have to stay, but I'm sure you will love it and find it very useful. If that is not your thing, that is not a problem. I'll see you next week. Have a good week.